Okay, I'm Dan Fitzpatrick at stockmarketmentor.com. Hope you're doing well. I hope you're not over trading. It's kind of easy to do that after the kind of moves that we've had. Things are calming down a little bit, at least from the things that I see, and there are fewer stocks to really be involved in now. There are still some great ones going, but just not quite as many as in the past. And that leads me to Lumentum Holdings. Now, I had been watching the stock. This is a trade that we put on Stock Market Mentor on our active trade ideas. You get the entry, you get the stop, you got the trade management, the whole bit. So this is how I did this one. I'd been watching this for a while, and this actually came to my attention from one of our members. One of our subscribers was asking me about it, and I'm looking at it going, well, it looks potentially pretty good, not at a point where I want to just jump in there and buy it, but it's looking pretty solid to me. And then right about here, it's looking really good. And so I put this on the list at 170 bucks. I looked at it a little bit lower, but I just kind of wanted to wait. So right at the end of the day, we got this. In fact, I take that back. It wasn't 170 bucks. It was a little bit lower than that, but it doesn't matter. Resistance was 170 bucks, and this thing jumped right through it and has now just continued on. But let me talk about the trade management. So you can see this 157.85. Hang on, sorry about that. 157.85. So the stop was like right down around here. Get a low entry, put a pretty tight stop here, less than 8%. And by the way, just because you have a stop at 8% doesn't mean that you need to let the stock flop around and ultimately get you stopped out and take that loss. If the stock isn't doing what you think it was going to do, if it's just, in other words, not conforming to your opinion, then you need to get out. You can always buy it back. So anyway, I'd put a stop down here, a pretty low risk trade. And then as the stock jumps up, so the next day it really ran, and then it's just still been going since then, even from where we got in. This is up almost 30%, but you could have bought on this following day as well, as long as you're managing your risk. So for us, the initial risk was here. And then just today, just so you know, I said, well, let's raise the suggested stop level to 197.20 right there. And so since I've done that, like, this is a really, really strong move in a short period of time. It's the power of the squeeze, baby. This is the launching pad. But when you get a big move like this, you want to protect it because it's only going to run so far. I mean, Bill O'Neill had said that that after a stock is made from a proper breakout, about a 20% gain, that's typically when traders are going to start taking profits. Now, if we look at 170 as the breakout, now the stock's at almost 27%. And so that's well past that 20% threshold. Now, does that mean, oh, I got to sell it all? No. And that's not what he was saying, and that's not what I'm saying. But what it tells you is this stock is stronger than usual, stronger than you would think it would be. That's what's happening here. And so you want to stay with this trade for as long as you can. And this is the fourth day in a row that the stock has closed above the upper Bollinger Band. My bet is, even if we slapped 3 standard deviations on this, it's still hitting this pretty good. And so this is kind of it's breaking the laws of statistics. Not supposed to be closing out there. So this is a strong stock, and what I'm suggesting is you just keep raising your stops on this. At some point, I do think it's a good idea just to be taking a little bit off the table. I wouldn't be doing it yet. Frankly, I'd kind of want to wait for the next red candle before deciding to take anything off. But if you just keep ratcheting up your stop, you're keeping yourself in a position to make more money, but you're also taking profit giveaways away. In other words, you're protecting your profit, not just your original trade size, that's long gone. Now you got to protect your profit. It's a balance between staying in sufficiently to get more money, more gains out of a stock that's running, but then also getting out before you're giving up a lot of your profits. And guys, that's more art than anything else. You can't really quantify that. So that's what I'm trying to do here is just kind of give you a little chart reading stuff here. So if you're not a member of Stock Market Mentor, once you fix that right now, dude, it's $7. For $7, you're getting in a stock like this at 170 bucks. And then a week later, it's up 25%, 43 bucks. Frankly, you know what? Even if you bought one share of this, you've paid for it like 9 times over. Okay, so that's all I got for you. And I will see you next time.